All right, so learning objective 4 introduces you to putting all these steps together in something called a production cost report. So you've already done most of the work. You've already computed the flow of units. You already know how to do equivalent units, and you know how to do unit production costs. So this is sort of putting it all together in a type of report or a schedule that this objective kind of brings us to here. Okay, so each department prepares one of these production cost reports. And it's really important to understand how or what activities are involved in manufacturing in the production of a good, whatever they're working on. So don't let go of my ego because we're still on it here. Ego waffles here, you can understand how it all works, right? So we have raw materials, overhead, and labor gets allocated, of course, to mixing department as well as to the baking and freezing packaging department. But then you kind of know how things work, right? The mixing department does its job. Hopefully it doesn't mix it up too well. And passes that along over to the baking department and they start doing their thing. But of course, they're all kind of baked while they're doing it. And that all that moves over to freezing and packaging department before you can yell about letting go of anybody's ego on a finished goods. So each of these departments are doing part of the production and they'll each have their own individual production cost report to put together to show what's going on, the types of activities and costs that are going on in each of these particular departments. So we're going to focus on what this production cost report looks like and how they put it together. So it starts basically with some basic data. So we have data, two pieces of data that we need, the number of units that are involved in a particular month and the costs that are involved in a particular month. Okay. And so here it starts off with, it looks like everything's for the month of June, the number of units starting in June, materials and conversion costs that were put into play, started into production. So in essence, you probably remember this from an earlier slide, they produced 900,000, right, units that were work in process, 700,000 were transferred out, and what's left at the end of the month is 200,000 in work in process. So you probably remember this from a previous slide. And then here, again, looking at it from a cost perspective, direct material costs at the beginning of the month, conversion costs at the beginning of the month. So total cost of work in process at the beginning of June was 85,000. Then you come down to the costs that were incurred while they were producing more waffles. And of course, again, same thing, direct materials and conversion. Remember, conversion costs are your labor and overhead costs combined. And so total costs for June were listed here. So this is data. All of this stuff is data that we're going to be using in putting together the report. So where you see these numbers, again, will be on the reports, okay? So the first step, okay, we look at the physical unit flow, right? So again, the actual units that are accounted for during that period of time, right? So again, we look at units started and units in production, and then units transferred out and units that are still being worked on, in essence, work in process inventory. So that flow, again, the numbers are going to come, because we're doing units, the numbers are going to come from this area right here. That's what you're going to see. Okay. And so for the mixing department, starting with 100,000 units, started 800,000 in production, so total of 900,000 units for June. What happened to those 900,000 units? 700,000 were transferred out, completely transferred out. 200,000 are still left in work in process. So that's what happened to the 900,000. But these are basically physical units, and we've seen this. So this is the first step that's involved. Now we have to compute equivalent units of production. So step 2 is that equivalent units of production, and you've also seen this before. When you look at equivalent units, we're looking at both the materials used and the conversion costs, right, to see what the actual equivalent units are. So the materials are all used, so all the ones that are transferred out are done, so all the materials have been used in that. All the conversion costs are also accounted for here. But for the work in process, clearly the ones that are already been started used all of the materials. So that's why in terms of equivalent units in materials, 900,000 is still the number here. But for the ones that are still in process that are only 60% done, then we then convert that to 120. So in terms of conversion costs, the total equivalent units of AGOs is only 820,000 AGOs completed, right? Those are equivalent units. So this, of course, you've seen, you've already done, and that is that's step 2, right? Step 3 is that production cost. Again, you've seen all of these before already. So this is sort of a review of the first few parts of the chapter. So again, what we need to look at are the unit costs for materials, for conversion, and then of course, those would be our total manufacturing costs. So let's take a look at how that's done here. So if you go back to the earlier illustration and you look at the cost section for June 1st, you'll see the direct materials costs were 50,000. I don't want to go back through those slides, but that's where this number would come from. Okay. And then you have to add the costs during production. So you go back and look at that slide as well, and you notice that the direct material costs that have been used through June, 400,000. So total material costs in June are the 50 that they began with and the 400,000 that they incurred while producing more. So 450,000 are the costs. Well, the costs of the materials need to be divided by the equivalent unit of materials, which we calculated in step 2, right? So we have $450,000 of costs that we just calculated here, divided into the 900,000 units, equivalent units rather, based on the materials we've used. So that means the unit cost of every AGO for materials is 50 cents. Okay. For the conversion costs, when you look at the same chart a few slides ago, and you look at conversion costs for June the 1st, what you'll see is $35,000 listed there. Okay. Then when you look underneath and you find out what were the conversion costs added during June for production, you'll notice that it's another 170,000 that was added. So the total of those numbers is the $205,000 of conversion costs incurred, okay, during June. So then we divide that by the equivalent units in conversion costs. Remember, the equivalent units of conversion costs was a little bit different because we didn't have all the conversion costs accounted for in the 200,000 AGOs that were still hanging out, right? So 205 divided by 20 will give us a 25-cent per AGO unit conversion cost. So each AGO will have this and the other cost involved. Right? So when you look at the total manufacturing costs per unit, then it's the per unit material cost plus the per unit conversion cost. We've already converted, cost was 25 cents. If you remember a couple of slides ago, the material cost was 50 cents. So the total manufacturing costs for each unit, which in this case is an AGO, is 75 cents. Okay, based on that. So those are things that you kind of knew in a way, because you've seen them in the previous slides. What we're going to do now is actually put together the whole thing. It's called a cost reconciliation schedule, and it's step 4. It includes the information you just looked at in 1, 2, and 3. So all of those calculations are part of it. In addition to that, we look at another thing. So here, when you look at Kellogg and their mixing department for June, they show that the total costs to the mixing department were $655,000 as calculated for work in process plus what was started. Okay. And so how they break this down then is say, okay, the all 700,000 that were transferred out at the full 75 cents per unit. And so that's where they get the $525,000 from. But then the 200,000 that are still being worked on, they have all the material costs, which were 50 cents each. But they only have 120,000 converted equivalent units at 25. That's the $130 here. So this is where the $655,000 number comes from. This is how they would do it on a cost reconciliation schedule. Okay. So this is something that you're going to be doing. This is how the entire report looks. It's all 4 parts put together. Okay, so this is, again, step 1, the physical units. Step 2, those, material and conversion costs in terms of units. Step 3, the cost per unit. And step 4, the total amount of costs and how that was broken down. So this is what the actual report looks like in full, but as you see, it's a step-by-step process, as you saw before. Okay, so let's go right to, I'm going to have some final comments, of course, but basically speaking, this is a very common and popular system, and those reports are used in manufacturing. So let's go right to the do it exercise to show how, give you an example of how these things would work. And this is emphasizing that last step that we just learned about. Okay. So in March, Rodeo Manufacturing had the following unit production costs. Materials were $6 per unit, conversion $9 per unit. Okay. So they started the month of March with no work in process. They transferred out 12,000 units. So these units were transferred out, which means they had both the materials and transfer costs totally involved in those. Right. But at the end of March, they had 800 units still in work in process inventory. They were 25% complete regarding conversion costs, 100% complete regarding material costs. Okay, and that applies to these 800. So all these 12,000 are done and includes all the costs here. Of the 800 units that are remaining, 100% of the materials are included, but only 25% of the conversion costs are included. So assign the costs for the units that are transferred out and the units that are still in process. So what we do here is We transferred out 12,000 units at effectively $15 each, because the 6 plus the 9, right? But in terms of the work in process, all of the materials were in those 800. So 800 times 6 makes sense. But in this case, only 25% were accounted for the conversion costs. Okay. So you have a couple of choices mathematically, right? But in essence, this 800 units, if you look at them 25% complete, that would be 200 units times the 9. So the work in process was only $6,600. And so when you look at the actual total of those that have been transferred out plus that are still in process, the total cost that this company incurred in March is $186,000. Okay. And we're not doing that piece. So this is where it ends for chapter 4. Sorry, for chapter 3. I think I'm already in my head on chapter 4. But any questions? We good?